Welcome,
Perfect.
everybody. I said I was going to do this live on my Facebook page, so that way all of you can see it. I'm going to check Facebook real quick to make sure everything is working, and we are go, and we are, because that's how technology works.
Awesome.
So I wanted to welcome all of you to our homebuyer seminar, which we're doing every single week now because this market's changing. And I wanted to welcome Tracie Schmidt. She's been on with us before from her new company, Nexa Mortgage. So Tracie, welcome.
Hi, thanks for
Are you
having me.
excited about the new adventure?
Yeah, I'm excited for what it could bring to clients and referral partners, and interest rates are killer. Over 190 different lenders that I can work with to find products, and some of the things out there that we could do now are great. So I can't wait to share that with you and your people.
Awesome.
Yeah.
All right, so let's get to it right away. So
Okay.
let me go to my share screen. I don't know why, like, today is, I've done this 1,000 times and technology is so weird, but let's get right to it. Let's get to
Sure.
the slideshow. So welcome everyone to our home buyer seminar. My name is Chris Spade. I'm a real estate agent with Keller Williams Realty San Diego Metro. I've been doing this now 16 years. And these are kind of all my credits that I've got. I'm a member of the San Diego Association of Realtors, a certified distressed property expert, a member of the Keller Williams Rainbow Network, and a member of the LGBTQ Housing Alliance. I've been a realtor, it's realtor. I've been selling for 16 years in San Diego. I used to be in TV news, and then I left to pursue a career in real estate. I've helped people navigate the 2008 market down to the 2020 market, which was nuts. And now we're in this new market, which is changing
Even
ever so
crazier.
much. So if anybody is watching, by the way, and has any questions, please let us know, drop it in the chat or drop it live. And we will get to your questions as best we can. So if you have any questions about the home buying process, or there's anything specific you want to learn, just let us know. So some of the things that we're going to be talking about, what we're going to cover tonight, and we're going to cover it really quick. Fears and facts about buying a home, the realities of the market today, because it's changed from the last couple of years, the simple steps to home ownership, financing, which is what Tracie's going to talk a lot about, and the next steps. I went too far. Oh my goodness. Okay, let's go back. So we're going to talk about the fears versus the facts of buying a home. So let's talk some fears first. The fear is you can't afford to buy a home right now. The fact is, until you do the math, you really don't know what you can or cannot afford. Number two, should I wait till the market gets better? The truth is there's never a bad time to buy a home. It's got to be what's right for you. And if you don't feel ready, then it's not the right time for you. But it is the right time to start building your roadmap, which Tracie's going to talk about. You don't have the money for down payment. In fact, there's a variety of down payment options that are available. Isn't that right, Tracie?
Absolutely. I mean, there are down payment assistance programs that are still out there for people. They cover usually the down payment, but you just have to have enough for the closing costs, which a lot of times, especially in this market, we could try to request from the seller as a credit from them to cover that. And then if you did just a traditional loan, as little as 3% down, which a lot of people don't know if you're a first-time home buyer, which is awesome.
Exactly. Here's the fear: you can't afford to buy your dream home. And the fact is, the best way to get closer to buying your dream home is to buy your first home. Another fear: I can't afford to buy a home because my credit isn't very good. There are always options, aren't there, Tracie?
Yes, there are options. And so one of the exciting things that we were going to talk about is at the last company that I worked with for almost 6 years, the minimum credit score that we had on government loans was a 580. With this new company, we have investors that will go down to a 500 credit score on both VA and FHA loans. So, which is great. I mean, there's probably a circumstance if you have that FICO score between 500 and 580 that something major happened in your life. So we want to kind of be able to figure it out. It's behind you, but you just couldn't get your credit to a different level. Or if we can get it, we can also help you do that as well and try to figure out how to improve your score for the transaction.
Exactly. Here's another fear which I never really thought about until, a lot of people have brought it up, but I should wait until I'm certain about my domestic future. First and foremost, you do not have to wait until you are married, partnered, or ready to have children to buy a home. You just need to do it to build up that equity, right? And in some cases, right, Tracy, that your partner may not be in the best financial position to even go on the loan, right?
Yeah, they don't necessarily have to. I mean, you could even get gift funds from them if they wanted to maybe invest in it. But I'll always look at the situation with either both people to see if it would benefit you, or to take one off because of credit score. So we'll just look at all situations depending on what you want to try to accomplish.
Yes. Now, another fear is buying a home seems too complicated. And the truth is, no one will ever tell you that buying a home is easy. It's not easy. In fact, it's a stressful process. I'm not going to lie to you about that, but that's what we're here to do to get you through that. Another fear, I should pay off my student loan debt before I buy a house. The fact is, student loan debt doesn't prevent you from buying a house. Isn't that right?
Yeah, I mean, that's really the last thing that you would want to pay off, because especially if it's in forbearance, we only take a small percentage of your existing balance if there's no payment reported on credit, depending on the loan program. So I would say if you have student loan debt, definitely just talk to a mortgage loan officer like myself, and we could tell you, is it worth paying that, or maybe a credit card, or maybe using that money instead to put towards a down payment or buying down the interest rate to get your payment lower.
Awesome.
Mhm.
All right. Let's move on. So we are going to be talking about a few things. So rates are still historically low, right, Tracy? They've dropped a little bit. So it's a little bit less than 7.25%. What were they at today?
Yeah, I love showing this slide because this was about right at my last company, but I sent you that email message. They did jump up a little bit today after the market this morning, but I would say we're still below 7%.
Okay.
Right now with my existing company, which is amazing. And that's the thing is it's kind of like being able to look at all of the different pricing and then picking what is best at that moment for the client. And there's so many options that we could really kind of shop that rate for them, which is awesome.
Awesome. So now the good thing about buying a home, you get equity buildup, value appreciation, your debt's getting paid down. So these are all benefits of buying a home. And you have pride of ownership, which means you have a sense of community, you have stability and security. You have the freedom to customize. You're not having anyone tell you can't put nail holes in the wall or paint it or put wallpaper up. You can do whatever you want to the house. You can gut it and remodel it. You have tons of tax benefits, and you also have wealth building opportunities. So these are all good things.
Mhm.
Now, so let's talk about this. So historically, your principal and interest ate up 21.6% of your total monthly income. Today, it's about 15.2%. So Tracy, talk a little bit about like what someone needs, what does debt to income ratio mean? Because some people are have asked me about that over the last couple of weeks.
Yeah, so in qualifying a borrower when you're not self-employed, so you're getting W-2s or pay stubs or 1099 income, pension, Social Security, stuff like that, we use your gross income, which is before taxes. And then depending on the loan program that you go with, the debt to income ratios are different. So a debt to income ratio is the gross income that you have versus the total expenses that you're going to have, including the mortgage payment. So things like cell phone bill and utility bills don't count in that number. It's any monthly payments that are on your credit report, in addition to what the new mortgage payment would be. And then we divide that by your income, and that's how you get that percentage. You could go as high on government loans, VA 60%, right? 62%, FHA 55% of your income, conventional up to 50%, 49.99. Where you really get a little bit stricter in those numbers is when you do what's called jumbo financing. And that's only because the loan amounts are large, right? You're looking over $900,000 in a loan amount. So they get a little bit stricter with those numbers to ensure that you could afford the higher payment.
Thank you.
Mm-hmm.
So let's talk about renting versus owning. So Now, this was done on a national level, so it's very hard to find a home in San Diego for $250,000, but let's just play the game
Oh,
that the house
someday,
is
never.
$250,000. So you're going to own your home, you purchase it for $250,000 and pay $1,200 a month towards your mortgage. Over 30 years, you have increased your asset from $250,000 to $435,000. Okay. You own that asset and it has grown over the amount of the time that you've owned the home and paid down the mortgage. Now, if you were renting, you're paying $1,200 a month towards your landlord's mortgage. Over 30 years, and this is assuming that your rent never goes up, you have paid $432,000 over 30 years. And you don't own anything. And in fact, there's a saying among realtors that said, if you're renting, you're paying someone else's mortgage, which is a very true statement. But I've made videos about how I hate that statement. And the reason I hate it is because I feel it's almost a way that realtors make their clients feel bad about themselves for renting for now. Remember, we don't make any money unless you buy a home, but the one thing I'm never going to do is pressure you into buying a home if you're not ready. So we need to make sure that you're ready. So just know that you're never going to feel bad with us about buying a home. We're going to make sure you get through it, right?
Absolutely.
Oops. I always mess myself up. Okay. So here's some reasons for people and why they hold off buying if they're changing jobs, if they're not quite sure, job security in a new company, but you could probably work around that if you needed to, right, Tracy?
Yeah, I mean, you just have to have a history. One of the things is if you're self-employed or if you're W-2 and then going self-employed, that changes a little bit, like timeline wise. But yeah, I mean, people are always like, "But I just started my job a month ago." That's okay. I mean, we could use what your current income is at that new job. It's fine.
Financial or credit score seems to not be an issue over at Nexo, right? Not
Yeah,
as
I
big of an
mean,
issue.
yeah, I mean, the credit score, no, and down payment, again, it's, our market is expensive. And so you're looking, even if it's 3% down of $500,000, that's 15 grand plus closing costs on average, right?
About 2%.
Yeah, about 2% of that. So I always tell people, that's about $25,000, let's say on 500 grand. But I mean, you could get up to 3% of a credit from the seller if you're only putting down 3% or 5%. So that's really what we're trying to do in this market is use the fact that homes are selling a little bit slower for the sellers and asking for credits for the buyers to give them incentive on not having to pay the closing costs.
Yes. Some people, it's too expensive, they'd be house poor, and that is a very real, reasonable fear. But there are still even loan programs that kind of graduate you into that final payment, right?
Yeah, I mean, it really, like I tell people, it depends on your personal situation. One of the first questions I ask them is, what do you want your total monthly mortgage payment to be? And honestly, a lot of people don't know the answer and they want to buy a house. So, I try to go through that. What are you paying now in rent? What are your other expenses? Because if I'm looking at your income before taxes, well, taxes are a real thing. Right. And you have to pay your mortgage after taxes. So that's why it's always good to really have a good relationship with your realtor like you, Chris, and a lender to make sure that we aren't going to just fit you into something that you're going to regret 6 months, 12 months down the road and not be able to afford.
Right.
Yeah.
And the other reason to hold up buying short-term ownership, you're not going to get any equity or appreciation. So those are some of the reasons to hold off. Now, here's the realities of our market. Right now, the median price of a home is approximately $780,000. Interest rates, we'll just say they're about 7.25%. Yeah, give or take. The market is shifting right now. And so it's not a buyer's market. It's still a seller's market because there still isn't enough inventory to sell for all the buyers that are out there. It's just a different market because people pumped the brakes with the interest rates going up. So that's the reality of what's going on. Now, here are the steps, the quick steps to home ownership. And we're doing this based off Harry Keller's book, Your First Home, which, for those of you that attend this live, I have copies of this in my office, so I'll be happy to send it to you for free. So here's the steps to homeownership. When you hire your agent, hopefully that is me, that you are watching this and that you use me. You secure your pre-approved financing, and you have a resource right here. 3, we find your home. That's the fun part, going shopping, opening some doors. We, go knock on a few doors, open those up, and see if it's something you like. Number 4, we make and negotiate an offer on your behalf. And we make that. And in this market, I don't want you to think that you have to give up everything like you did 2 years ago, because you don't. Number 5, you get the home inspected and negotiate repairs. This is probably the most critical and crucial part. This and the loan, those 2 are the big things of the home buying process, because you want to be able to negotiate all of that. And if we need to, we can get some credit. Keep in mind though, and this is what I want you to keep in mind, is if we have already negotiated closing cost credits at the beginning of the transaction when we wrote the initial offer, the lender only allows you to get so much credit. Isn't that right, Tracy?
Yeah, so it can't exceed your total costs of the loan. And then the percentage of the sales price will depend on the loan program that you have. But you can also be creative. So let's say you got a certain amount and then you wanted to get some additional, you could buy down the interest rate and use it towards that, because that'll bump up your closing costs. You'll get a better rate, and then you could use more of a credit. So there's ways around that also.
Okay, good. And then step 6, you close and you are a new homeowner. Now, I want to take a quick second for you to go ahead, download my app. This is where it's at, app.kw.com. And this is my code, KWFKVBLA, and that is my app. So if you find that you want to go search for homes and see something, you can message me directly from this app. It's very, very helpful. So let's go over these, and we'll go over them really quickly. Step 1 is hiring your agent. So as a buyer's agent, it's my job to educate you about the market, analyze your wants and needs. I'm going to ask you, give me your top 5 wants, give me your top 5 needs, the difference between a need and a want. And I always say this in a very broad term. You need a roof, you want a pool. Those are the things that you need. I don't like the word steer, but we're going to, help you navigate towards homes that fit your criteria. We're going to coordinate the work of the other professionals, escrow, your loan officer, like Tracy, title reps, home inspectors, all those things. Negotiate on your behalf. We talk about it, we come together with a solution, and we solve any problems that arise. So one of the things that we do is we have a thing called a buyer's representation agreement. What that does is it sets mutual expectations in writing for you and for me about the process that we're about to go through, the journey that we're about to go to. It commits me to finding you the perfect home, and it confirms exclusivity between both of us, which means, let's say, for example, you go to a new construction project, let's say. You want me there to help negotiate on your behalf because the sales rep at the new build project is working for the seller. They work for the builder. They don't work for you. So that's one example. So when to hire the agent. So you're going to want to hire the agent as pretty much as soon as you're starting to talk about that process. Now, most people get their agents through referrals, and I think that you should do that. It doesn't hurt to talk to a couple people, but hopefully it's me that you work with. We'll start working together. You're going to get your finances in order, and that's when you're going to start talking to Tracy. Tracy is going to go through the process. I'm going to get you pre-approved. You want a pre-approval? But Tracy, what's the difference between a pre-approval and a pre-qualification?
So pre-approval means that it's actually been looked at by an underwriter, right? And there's your income has been reviewed, your assets have been reviewed. And a pre-qualification basically just means that you've kind of like taken a phone call, right? And you're like, oh yeah, great, you worked this, and you haven't gotten all the documentation. So, and honestly, the process is really easy. I mean, everything is done securely online. Probably the application process for you to do it on your own and fill out your information, maybe 10 to 15 minutes. Notifies me when you're done. It gives an auto needs list based on the answers that you do in your application automatically of documents to upload. You just drag and drop them in, puts it in front of me, and it takes me like 2 hours to work up the numbers. And I'm looking at your income, your assets, your credit, and then running a desktop approval. So I can show Chris, your real estate agent, and then he could show the seller's agent that we have gone through those steps of getting you an actual pre-approval.
Yep. Then we're going to start looking. We're going to get you under contract. We're going to get you to the closing table. You get to move into your new home and you get to make your last lease payment.
Yes.
So let's talk, Tracie, the pre-approval. Now, we just talked a little bit about this.
Yeah.
What types of things are you looking for when someone gets pre-approved for a loan? What kind of documents do you need?
So if you're a wage earner, meaning you're getting a W-2 and a pay stub, you'll want to have handy your last 2 pay stubs if you're paid every 2 weeks. So we'll always look at 30 days of income. And then you're going to want to have your last 2 years W-2s. So we're in kind of this weird period where the W-2s are going to be coming out soon. So I'll still ask for 20 and 2021 to get us started, but just be prepared that when you do get your W-2 for 2022, you're going to want to shoot that over to your lender as well when you receive it. I usually only get 1 month of statements of their assets because generally enough time goes by where you'll get a more recent month. So I don't like to get too much documentation up front, but that's like if you're going to use your 401k, your checking, your savings, whatever that is. And that's really all you need. I mean, W-2s, pay stubs, and where the down payment's going to come from.
Okay.
That's enough information for me to work up a sales price it with rate, and get payments in front of you in like a little spreadsheet so you can compare the different sales price options.
Awesome. And you can do self-employed, right?
Absolutely. Yeah. So self-employed, again, there's 1 year tax returns. I mean, there's 2 years tax returns. Now we have bank statement loans that you could do. We have no income, no ratio loans. So if you are self-employed, but for whatever reason, you had to not, make enough income because of COVID, but you've been self-employed, we could do something still for you. So there's so many options out there for people, regardless of their income situation.
Awesome. So here's the other thing. Just like realtors, you get referrals for lenders. Hopefully, Tracie's one of those people you want to give a chance to. You choose the one that you feel most comfortable with. Tracie's very, very easy. She's helped several of my clients. She's going to help you prepare the loan application. I'm telling you, when I talk to people, that's their biggest freak out, is actually doing the loan application. I can tell you from my personal experience, filling out a loan application is nothing. It is almost like playing a video game. It's so easy. I mean,
ours
like it used to be.
Ours has pictures. So like if it's a checking and savings account, there's a picture of a bank, or we try to make it as simple as possible because it gets overwhelming, and it is a decent amount of information. I mean, you're applying for $500,000 or $700,000. So there's documents that are needed. But what I would also say about the lender, there's so many mortgage lenders out there right now. And because of the market shift, you're going to start to see lenders kind of exit a little bit, same as real estate agents, right? So Chris and I have been doing this for a really long time. We've seen these ups and downs. So I suggest you always ask your lender, look them up, Google them. What is their presence online? Ask them to document reviews that they've received. You could easily find reviews online for me and my team. So go one step further, right? Ask them, what are your turn times? What does your process look like? Will I be dealing with you throughout the entire process, or are you going to pass me off to someone? So those are questions that buyers don't tend to ask. They just ask about rate. But there's so many other factors that are important when you're looking at a lender aside from interest rate.
Exactly. Whoops. Hold on 1 second. Okay. You get your pre-approval perfected. So you directly apply digitally, and it helps expedite the process. So let's talk about creating a budget. The best thing that you can do is identify all your expenses. And I am going through this right now in my business and in my personal. And one of my Facebook friends posted something about go through your monthly budget, look at everything that you purchased that was either a want or like you went out to a bar or restaurant or whatever. Take that and cut that number in half and take that and put it in the bank and start building up that way. Another guy I follow on TikTok, he's also a lender. He said, you know, if you and your partner just save $170 per week, each of you save $170 per week, you would have enough money at the end of 2023 to put down on a $500,000 FHA purchase. It's
Cool.
not much money, but we
Yeah.
have to think about where are we wasting money, right?
Yep.
Yeah. And then determine the amount that you can afford to comfortably spend on a new home and make those simple changes.
Don't be surprised if you see a TikTok video on that from me tomorrow. That's good advice. I like it.
No, it was really, when they
I
said
like
that,
it.
I was like, so I'm going to make a couple of those, but I was
Yeah.
like, when he said that, I was like, oh my God, that's just,
When you break it down. Yeah. That's
yeah,
awesome.
yeah. And how much money do we spend on Starbucks? It's so easy to reload your card.
Yep.
So understanding mortgages, 3 decisions: down payment, how much, interest payment, what's the rate, and the term and the type of loan, because depending on who you are, it really depends on the type of loan that you can qualify for, right, Tracy?
Yeah, and there's programs now, we have 40-year terms. So if you need a longer term for a lower payment, we have interest only loans. So if you want to budget it where you're only paying interest and then you could pay more when you can afford it. So and then there's, 30-year, we could even do, which is really cool, is like someone wanted to do a 27-year loan, you could do like off terms, right? So you don't have to do like 30, 25, 20. You can do something in the middle. It's just amazing the things that are out there.
Nice.
Mhm.
So your monthly mortgage payment is broken down into 4 things. Tracy, do you want to talk about these?
Yeah, so you have it. So we call it in our business PITI. So if you hear that term, it stands for principal, interest, taxes, and insurance. So it's the first letter of each word, if you didn't know that. So principal is what you're paying towards the equity in your home. That's what Chris was talking about. So as you're paying down the principal, that's your money, right? You're realizing that value as the balance goes down of the principal. That's money that ultimately you're saving and going to be able to take out when you're ready to refinance or to sell. Interest is what you're paying the lender. The majority of interest goes to the lender at the beginning of the mortgage, right? So don't be surprised if you see a little bit at principal at the beginning, but the benefit is the interest that you're paying could be tax deductible. And I say could because I'm not a tax accountant, but you should talk to a tax accountant if you're considering buying a home, because it will help you as far as what you can claim in your income and get more out of your paycheck each month. Taxes is what you pay property taxes with. On average, we use about 1% in San Diego or in California to kind of gauge what those would be. And then we divide that by 12, and that's part of your payment. And then insurance, a lot of people are confused by this. So I usually just tell people, if you're renting now, you probably have renter's insurance, same concept. So you're protecting, instead of just the walls within, now you're protecting the entire house because you own it. So you would just call your car insurance person or whomever and just say, hey, I'm buying a house, work up a premium, and you get to pick who you're going to work with. We don't control that part of the process for you.
Yeah, and the lender, it's easiest if you just impound those taxes and insurance. In fact, the lender wants you to impound, especially the insurance, so they know it's being paid.
Yeah, in California, it's actually a lot. If you you have to put at least 10% down to exclude taxes and insurance. So you do have the option if you did want to pay it yourself, but you have to at least have 10% down payment.
Yeah, and you have to be good at budgeting because that tax bill comes 2 times per year.
Yep, absolutely.
Okay. So the down payment based on your pre-approval amount, but you can really put down, even if you're doing a FHA loan, for example, which is 3.5%, you can put more down. You can put more down than the 3.5%, but depending on the loan, it can vary anywhere from 3 to 20% down. The funds, they can come from, your side jobs, your savings, gifts, right? Tracy, you can get gifts. I've been hearing people,
Yes.
they get married and they don't want gifts, they just want cash, so that way they can use the cash to buy the house.
Yeah, you can actually use, so one thing that I'll say is when you're thinking about buying a home, really for like, 60 days before closing, the underwriter is going to look at whatever accounts you're going to use. And so anything that's a non-payroll deposit. So like, for example, though, if you have a side job and it's cash, you have to be able to somehow document that cash, which is sometimes difficult to do. So unless enough time goes by, right, we wouldn't be able to use that as cash. So, but weddings are good. Gifts from family, do not take the gift from family until you're in escrow on a property, because it's less documentation, right? Then your family doesn't have to show their bank statement. You don't have to document it going in as a deposit. What we do is we just let you know that your family member will wire the money directly to the escrow company when it's time to close the loan. And so we'll help you and walk you through that process. But yeah, all of those things are good. A lot of people now, because the stock market is so crazy, you have 100 grand in the stock market losing money every day, right? If you were to take that money out and invest it into a home that in San Diego is on average appreciating 5% a year, right? You're earning 5% a year, almost guaranteed, purchasing a home in San Diego County, just if you look at history. And so it's not fluctuating. You're not losing money, you're gaining money each year. And that's what I try to tell people. It's like, if I gave you an option to put your money into something that's earning you 5% a year, where your checking account is earning you less than 1% a year, why wouldn't you want to invest your money into that asset, which is a home?
Exactly.
Right?
Exactly. So we want to maintain our pre-approval. So there's a few no's. No big purchases. Don't go buy a car while you're in the escrow process or you're looking. Don't pull any new credit or debit and get that added. Don't change your jobs. Protect your down payment. Don't go spend it. Don't go on vacation. Don't buy Taylor Swift tickets. Don't do any of those things. Okay. So those are all very important. So you want to maintain the pre-approval, because if we go through the process and you release the contingency on the loan as we're going through the process and you buy Taylor Swift tickets with your down payment, well, you're screwed. You're going to lose your earnest money deposit.
You're gonna be calling Taylor and getting that money back.
Yeah. I don't even know what Taylor Swift tickets cost. I don't even want to know, but everybody was going crazy for them. Step 3, we're going to find your home. Here's a few things. We're going to define what you're looking for, your needs versus your want. You're going to learn about the market through me, and then we're going to refine your search as to what you're looking for, whether that's a detached home, single or a condo, townhome, whatever the need may be. Again, if you want to look up my app, here is my app that you can do it, but you can also rewatch this on Facebook. We're going to have that, and I'll upload this as well to YouTube. This is what typically you look for and what I look for when you're making the purchase of the house. You're looking for layout, space, location to work in schools, and features and amenities. What I'm looking out for is how the home compares to terms of size, layout, and value to other homes in the area. I'm looking at potential resale value as well. I'm also looking at big ticket items such as roofs, HVAC system, maintenance, structural concerns. If I see any major cracks in the walls, on the ceiling, I can, I'm not an HVAC expert, but I can look at one and go, that's old. That's going to be a big deal. And that's not cheap. Those are not cheap at all. So those are the things that I'm looking for. So I'm going to draw these concerns to your attention. And once I've done that, you can make the decision about whether or not you want to move forward with that purchase. Condo or townhome. Let's go over the pros or cons. Pros: lower cost per square foot. No yard work or home maintenance. You have amenities typically such as swimming pools and playgrounds, and you have a community. There are many different types of condo complexes. Some of them are very small and you don't have a high HOA fee, but you really don't have much, right? The cons: shared ownership. You've got the space inside the building. You have homeowners fees and shared maintenance costs, which means there could be assessments. So if the reserves are low, you could get assessed and you could get hit with a $10,000, $20,000, $30,000 tax bill. It's managed by a board. So you have a president, vice president, and secretary, and everybody within that HOA is invited to those meetings. And I always tell my clients the best way to know what's going on in the HOA is to get on the board. And you are governed by rules around pets, vehicles, noise, that types of things, parking spaces. Can you move a wall? Can you add a washer and dryer? If it's community, those types of things. New construction as an option. Here's the thing, the pros, brand new, usually comes with the builder warranty. You get to pick your lot, features, and design. You can lock in a price. Good deals right now, yes, you can. It just really depends. The cons, every one of those features you're adding to the price. You're not quite certain what the future of the neighborhood looks like because it's typically in outlying areas. There are no nearby amenities yet, especially if it's brand new area. And there is no firm closing date. So step 4, we are going to make offers and negotiate on your behalf. So we are going to make an offer on the price, and the offer has to reflect the true market value of the home. And we're also going to get appraisals on that to make sure that you are paying a fair price for the home. Terms. There's 6 basic categories in addressing timing and financial considerations. Those would be all your contingencies for your loan contingency, appraisal contingency, getting your deposit in. There's steps throughout this process, each step of the way. Contingencies, they're referred to sometimes as conditions that allow you to opt out of the deal if it's become a problem. And in many cases, you can get your deposit back. Not in all cases, but in many cases, you can get your deposit back. Step 5, inspection and repairs. We'll go over this. You have 7 to 17 days after an offer is written. The contract says 17, but that's negotiated between 7 and 17 days. And the property inspection will expose any structural hidden issues. It's the big stuff that matters. Cracks and crumbling in the foundation, cracks inside the house over the windows, water stains in the ceilings, floors, walls, faded, worn-torn shingles, plumbing, electrical problems, mold or termite. Anything that is a health and safety issue, that's what concerns us. We're not concerned with the paint on the walls, the wallpaper, the shag carpet, none of that. We're just concerned with the big stuff. Step 6, this is where you get to be a homeowner. This is where Tracy has funded the loan at the very end. She calls me and she says, the loan's funded. I get an email from the escrow officer, loan's funded. I've set it up to record. The day that we fund your loan, as long as the funding happens early in the morning, which they typically do before like 9 a.m., we can record that same day. And it usually records now around noon. So you'll get your keys at around noon. If it funds a little later at that cutoff, we'll record in the afternoon. You'll still get your keys, but it'll be later. So if you're buying a house in Vista, and I'm down in San Diego, it's going to take a while to get up there on a Friday night, but we can still get you your keys. Don't worry about that. So you got to keep yourself mortgage worthy. You're going to budget for additional expenses. Closing costs are typically 2 to 3% of the loan amount. That includes your lender, title, and appraisal fees. Your earnest money deposit is 1% of the purchase price. Typically, it can be anywhere from 1 to 3%. That is negotiable. We don't have option period money. Some states do. That's a non-refundable fee. We don't really do that in California. I guess you could negotiate it, but I've never had that happen here. Inspections, they're anywhere from $300 to $600, depending on what you get. They can go up as much as $1,000, depending on the size of your home. If you want to get a survey of your property, not many people don't do that. They're pretty satisfied with the title report, but you could. That's about $400. Typically, you want to have 1 year of homeowners insurance, and you want to have reserves for improvements afterwards. When you get to the closing, you got to bring your photo ID and your patience and a well-oiled wrist because you're going to be signing a lot of documents. It typically takes about an hour. You're going to get a seller's estimate of your closing statement and wiring instructions. You are going to take those wiring instructions with that estimate to your bank. It's going to say on the bottom exactly how many thousands of dollars you have to wire into the escrow company. But before you do that, you're going to pick up the phone, you're going to call the escrow company, and you're going to verify those wiring instructions. The wiring instructions will be exactly the same instructions that you get when you send your earnest money deposit. Wire fraud's on the rise. I'm going to remind you about this over and over and over again. You're going to get sick of hearing it, but I'm here to protect your money. So make
Well,
sure
also too, it's important for them to know, like, we can't fund the loan until escrow is in receipt of your
of your
wire.
funds. Yeah.
So
Yeah.
you want to make sure, you know, if you want to fund today, and you sign your loan at 7 o'clock at night, the night before, and your bank takes X number of hours to wire, that's just something to kind of check in advance, you know, like, hey, call your bank. I'm looking to close on a loan, you know, in a few days, on my mortgage. How long is it going to take you if I request a wire to send it over? Just so we have some kind of timeline. So
Yep.
we're not stressed out at the end.
Yeah. And it's always a good idea to wire it the day before. So that way escrow the money lands in the escrow account, they see it and they're like, I have your funds. We're going to call for funding in the morning.
Mhm.
And then we get that done the next day.
Yep.
It's all good. Then what you're going to do is protect your investment. You're going to maintain it. You're going to keep an eye on it. You're going to keep a file of all the receipts because you're going to need those when you go to sell the house, because the new buyer is going to want to know everything that you did on the home. And then we're going to get you a home warranty in case there's any sort of hiccups along the way. So I don't know that anybody has any specific questions. I don't think there was any in the chat, but I will stop the screen share. And I don't see anything on Facebook yet. Did you have anything else to add, Tracy, before we go?
I know you mentioned like the book that you had, but I can't share my screen. But I was going to put in
Let me see if I can give you screen.
Okay.
Hold
I was
on.
going to throw in the chat. So it took me a really long time. But I'm so happy that I was able to
okay, I made you a host.
Okay, let me show really quick. So this is like a basically written that I wrote for people because it was all the questions that I was getting about buying a home. And so I put the website in the chat. It's just makemortgageseasy.com. And it's kind of what Chris was talking about in this seminar, right? So you can go in there and just get your free copy. You could just download a PDF copy, or I can send you a hard copy of that as well. And just when we talk to you, just, you know, let us know that you were on the call with Chris and I and got some valuable information. But I just wanted to share that with people because it was like blood, sweat, and tears in doing. And it's answering the questions that I most likely get from people that are looking to purchase a home. So I just wanted to share that with you.
Thank you. Thank you. Well, I'd like to thank everyone for coming. Tracy, can you give me back control so I can?
Yes. How do I give you control?
Just go up to my name, just go up into the upper right corner with the 3 little dots. That's all you do. And then make me the host again.
Upper right corner in the
you'll see a blue thing.
Where do I have
it's okay if you can't.
Let me see. I want to make you, I just see, okay, can I stop sharing somehow?
No, you did stop sharing. Don't worry about it.
Oh,
this is where we're being goofy online. So we'll just stop the whole thing. All right, everyone. If you have any questions, feel free to reach out to me. Tracy, what's your number?
858-336-5200. And please reach out with questions. You're not obligated. We don't charge anything up front. It's just information to help you kind of go along the way.
Awesome. Thank you so much, Tracy. Have a great day and have tell your niece happy birthday.
I will, and tell Eric. Bye, Eric.
He's waving. Bye-bye.
Bye.